This is Red Lion Trader talking about the charts that we use in our trading room. This is my third attempt to do it in under 5 minutes because that's the YouTube restriction, so I'm just going to get right at it and talk as fast as I can. This, of course, is just a price chart, so we don't need to talk that much about the price chart. We track the EES, which, of course, is the most traded and the most watched index in the world, and it often leads the market and tells us what the current price action and the current market action is. Our next indicator over here is another price chart. Currently we have the RUT. We usually have a cash index up here to see what a cash index looks like on the market in a particular time. This day we were trading and interested in the RUT because we felt that the small caps were in a really weakened state. We were expecting a pullback in the small caps. In fact, we got a pullback down here to 2%. Got a nice looks like almost another whole point up. So we have a nice chart here with a nice pullback numbers, and so we're able to see what the price movement during the day on a cash index is. Okay, the next chart is the advanced decline line. So this is the number of stocks that are advancing versus declining on indexes and markets. So we have the Dow Jones, the SP 500, which are kind of the smaller indices, and then we have the New York Exchange, which is the market. We have the NASDAQ Composite, which is the market. We have the Russell 2000, which is a broader market, small cap concentrated, and then the All US. And we have 3 levels of indicators on here, 3 levels. The solid level yellow line up here is the positive 2 to 1. So if you're at that line or above that line, then you have 2 stocks for every stock. That's 2 stocks trading up for every stock that's trading down. So it's positive 2 to 1. This is neutral, and this would be negative 2 to 1. So on this particular day, you can see the Dow Jones, the SP 500, New York Stock Exchange, all traded up 2 to 1. The All US looks like it closed almost exactly at positive 2 to 1. While the NASDAQ 100, the RUT, and the NASDAQ Composite were slightly under the 2 to 1. So how they stack up, we look at we see tech was very weak today, and here we see the industrials were very strong. So how they stack up tells us a lot about what we should be trading and how the day is developing. So that sits up in the upper right-hand corner. Down here is my favorite chart, which is the tick chart. And I often trade off the ticks, and you'll often see, if you're in the room, since I control the charts, you'll see me doing things like putting a trend line underneath. And this trend line tells me, if you're not familiar with what the ticks are the number of stocks on the New York Stock Exchange that are currently trading on an uptick, and from that are subtracted the number of stocks that are trading from the downtick. So it's a difference between uptick and downtick for the New York Stock Exchange. So if you look at this number right here, which is like 808, that would tell me that there's 808 more stocks on the New York Stock Exchange that are trading on the uptick than the downtick. Okay, so if I look at a chart like this and I see that the signal is traveling up in a nice strengthening pattern, that tells me that we're going to go up. The price is going up. That the stock that was available down here and that was trading at the ask is now only available at the it's trading at the bid, is now only available at the ask, and so now people are starting to chase price a little bit, and price is coming up to the point that you have a huge number of people that are just whatever the ask is out there, they're buying. So if the ticks are on the positive side up here in this green circle, it is a seller's market, and if it's down here, it's a buyer's market. So it's weak, strong. And then we track that with Bollinger Bands, and we can go over that a little bit more in the room, but that's why it took me over 5 minutes last time, and now I only have a minute left. This is the difference in the New York Stock Exchange, the difference of 52-week new highs from yesterday and 5 days ago. We can explain that when you're in the room too. This is the market thrust, and it tells us our market direction. It's kind of like a trend line, and it uses an AD line and advancing volume versus negative volume. So the important thing on the market thrust is to just really follow the direction, and the smoother and the clearer the direction, the easier it is to trade. So it helps you stay in your trade. So if you entered a trade in here, you could watch the market thrust and say, I'm good. So these little wiggles in the market shouldn't shake me out. The next is just bottom right hand corner is just a stock we're particularly interested in, and this was the dollar. So the market's been kind of trading counter to the dollar, so we have this here, so we're able to watch the dollar as a sentiment indicator. Okay, that's it. I'm done. It's the 5-minute introduction. Come into the room and we'll spend more time and talk about each of the charts and how to trade with them. tthedge.com. This is Red Lion Trader, and I am out.